Here are the crypto top headlines covered in this video. House Republicans urge SEC to rescind disastrous SAB 121. Next, Bitcoin exits post-halving reaccumulation phase. History says it's now breakout time, says crypto analyst. Also, why is Cardano price up this week? Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: House Republicans urge SEC to rescind disastrous SAB 121. Republicans in the U.S. House of Representatives and Senate claim the SEC evaded the notice and comment rulemaking process required by the Administrative Procedure Act by issuing SAB 121. More than 40 United States Republican Party senators and representatives have called on the U.S. securities regulator to rescind its disastrous Staff Accounting Bulletin No. 121, or SAB 121, rule after a repeal bill received bipartisan support before being vetoed. In a September 23rd letter to Gary Gensler-led U.S. Securities and Exchange Commission, House Financial Services Committee Chair Patrick McHenry, Senator Cynthia Lummis, and 40 other politicians claimed that SAB 121 upends custody rules for cryptocurrencies, weakens consumer protections, and stifles financial innovation. The 42 politicians further claimed that SAB 121, a proposed rule mandating SEC reporting entities that custody cryptocurrencies record those holdings as liabilities on their balance sheets, was issued without consulting any prudent regulators, and that the accounting approach deviates from established accounting standards. It would fail to reflect the legal and economic obligations of the custodian and put consumers at risk of loss, the letter claimed. By issuing this rule under the guise of staff guidance, the SEC evaded the notice and comment rulemaking process required by the Administrative Procedure Act, the politicians added. Rescinding SAB 121 is the only appropriate action and well within the SEC's authority. The Democratic Party Representative Wiley Nickel previously claimed SAB 121 would prevent U.S. banks from custodying cryptocurrency exchange-traded products at scale, consequently creating a concentration risk by handing more control over to non-bank entities. The letter ahead of a House Financial Services Committee hearing with the SEC on September 24th. The politicians also slammed the SEC's Office of the Chief Accountant for supposedly working with certain institutions to avoid the balance sheet reporting requirements, which could lead to inconsistency across the board. Bank of New York Mellon, the largest custodian bank in the U.S., reportedly received an exemption from SAB 121, according to a September 17th hearing in the Wyoming legislature. The letter's supporters largely comprised Republican members of the House Financial Services and Senate Committee on Banking, Housing, and Urban Affairs. House Representatives French Hill, Tom Emmer, and Senators Bill Hagerty and Tim Scott were among some of the signatories. President Joe Biden vetoed the SAB 121 repeal bill in June after it received bipartisan support in the House and Senate. The House then failed to overturn that veto on July 10th, falling 60 votes short of the two-thirds majority needed for it to move to the Senate. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: Bitcoin exits post-halving reaccumulation phase. History says it's now breakout time, crypto analyst. As the cryptocurrency market stabilizes following a turbulent period, a new analysis suggests a parabolic breakout in the price of Bitcoin could be on the horizon according to historical data. Pseudonymous crypto trader Rect Capital noted in a September 23rd post that Bitcoin has historically broken out from its reaccumulation range roughly 154 to 161 days after the quadrennial halving. The fourth halving, implemented on April 20th, reduced the per-block reward paid to miners from 6.25 BTC to 3.125 BTC. This marks 157 days since the event, Rect Capital observed, meaning we are within the breakout time frame. History suggests it is breakout time for Bitcoin, the pundit added. Bitcoin mining reward halving is a pre-programmed code that takes effect every 4 years or after 210,000 blocks are mined on the blockchain. The event slashes the reward miners receive for validating transactions by 50%. The main goal is to keep the Bitcoin supply in check and ensure the asset becomes scarce over time, unlike fiat currencies, which have ever-increasing supply, monetary inflation. Bitcoin has a 21 million fixed supply, and halvings helped to regulate how fast that limit is hit. The previous 3 halvings have always led to new historic highs in the Bitcoin price in the months following the event. As such, analysts expect this trend to accelerate as more institutional investors add BTC to their portfolios, further shrinking the supply. In 2016, BTC busted out of the reaccumulation phase around 154 days after the halving. In 2020, meanwhile, the alpha crypto broke out 161 days post-halving. Rect Capital observed in a follow-up post that Bitcoin is breaking out from its range-bound reaccumulation range in the next couple of days this week. Over the next week or so, history suggests Bitcoin will be transitioning away from its reaccumulation phase into its parabolic upside phase. October is ripe for Bitcoin to break out. The third quarter has been quite challenging for Bitcoin, with headwinds such as the sales by the German government and Mt. Gox redemptions. However, Bitcoin has shown remarkable resilience this September, a seasonally bearish month, jumping 9%, essentially outshining its second-best September in 2016, when surged by 6% in the month. Rect Capital posited earlier. Who would have thought Bitcoin would print its highest ever average return for the month of September in this cycle? Generally, investors expect a significant rally in October based on Bitcoin's average historical returns, with BTC posting gains in 9 of the last 11 years. As of press time, the world's largest cryptocurrency by market value was changing hands at $63,482, down a negligible 0.1% over the past 24 hours. BTC is currently 13.8% away from its March all-time high of $73,737.94. Our next top headline: why is Cardano price up this week? Cardano founders' upcoming meeting with the Argentine President Javier Milei is one of the main bullish factors for ADA this week. Cardano has outperformed the broader crypto market today, rising by over 4% in the last 24 hours and by approximately 15% in a week to reach 0.37 cents on September 24th. Key factors behind ADA's rally today include Charles Hoskinson's upcoming meeting with Argentine President Javier Milei and whale accumulation. Hoskinson's upcoming meeting with Milei boosts ADA adoption scenario. ADA is rallying due to the optimism surrounding Charles Hoskinson's upcoming meeting with Argentine President Javier Milei during the Tech Forum Argentina on October 19th. ADA price has jumped by over 9% since the news, including today's gains showing that its traders are speculating bullish on the Hoskinson-Milei meeting, especially given Milei's pro-crypto stance. Rumors are circulating about Milei's intentions to launch a central bank digital currency in Argentina. Argentina has embraced Cardano with open arms, according to Hoskinson. In June 2024, for instance, the Cardano Foundation forged another partnership to promote local blockchain adoption. One of its earliest development partners, ATIX Labs, originated there and played a key role in Cardano's early growth. Top Cardano traders are accumulating ADA. ADA's rise this week, following a period of rising accumulation by its richest investors, also known as whales. Notably, the number of entities holding at least 1 billion ADA tokens has increased over the past months. Similarly, those with 100 million to 1 billion ADA balance have also increased in the same period. Conversely, the 10 million to 100 million ADA balance cohort has witnessed a decline in its entity count, indicating that traders in this group accumulated Cardano tokens to become part of the 100 million to 1 billion ADA balance cohort. The accumulation spree appears around the Chain hard fork, which introduced a governance mechanism on the Cardano blockchain on September 2nd. ADA price enters falling wedge breakout stage. ADA's recent gains are part of a falling wedge breakout, suggesting that the token may continue rallying further into October and the coming months. A falling wedge forms when the price trends lower inside a descending channel range defined by two converging falling trend lines. As a rule of technical analysis, the pattern resolves when the price breaks above the upper trend line and rises by as much as the maximum distance between the upper and lower trend lines. Applying the same technical rule on the ADA to USD chart brings its upside target for 2024 to around 63.8 cents, up 70% from the current price levels. Conversely, the bullish outlook will risk invalidation if the price returns to the wedge range, increasing the possibility toward the pattern's apex point at around 63 cents instead. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.